Welcome to this Consumer Council Roundtable on accessible finance. My name is Mick McAteer. I'm the Deputy Chair of the Northern Ireland Consumer Council, but I'm also a co-director of the London-based Financial Inclusion Centre. So this subject is very, very much close to my heart. We have a great panel of speakers coming up to help us shed some light on the issues affecting consumers when it comes to accessible finance in Northern Ireland. But before I do that, let me try and set some of the context for the roundtable. I think what's really, really important to understand is just how significant the challenges facing Northern Ireland consumers are. The current economic climate represents a real challenge to Northern Irish consumers. They are struggling with their bills, they're worried about price increases. And if you think about it, Northern Ireland consumers already have the lowest level of disposable income compared to the rest of the UK. The Financial Conduct Authority, who's the main financial regulator, conducts a really big survey called the Financial Lives Survey. And what that shows is that Northern Irish consumers are more likely to have at least one characteristic of financial vulnerability than typical consumers in the rest of the UK. And also more than half of Northern Ireland consumers feel that keeping up with domestic bills and credit commitments is a burden, compared to under half for the rest of the UK as well. Now, as well, we also have to factor in the fact that Northern Ireland has almost double the number of disability, or the proportion of disability claimants, at over 12% compared to 6.5% for the UK on average. And more citizens in Northern Ireland actually face long-term illnesses at around 30% of the population aged between 16 and 64, compared to around 1/4 in the UK. So that sort of tells us really that it isn't just about access to finance, but there are real issues with poverty and economic exclusion in large parts of the Northern Irish community as well, compared to the rest of the UK. Now, to help us explore more about the issues of accessible finance, what we're going to do is cover 4 key areas that we think are very, very important when it comes to accessible finance, and that is access to cash, access to fair and affordable credit, access to insurance, and I'm really pleased that insurance is included, because it's always the Cinderella of financial exclusion. It doesn't get anywhere near the same coverage as access to credit or access to cash. And then the 4th subject we'll look at is access to money and debt advice, because without money and debt advice, then it's really difficult for consumers to be supported to make the right financial choices. Now, I think what we're discussing here today is all the more important as we emerge from the COVID financial crisis. And I think it's worth noting that we need to learn lessons from the last great financial crisis in 2008. And what actually happened, when you look at the research, is that many households actually failed to recover from the big crisis in 2008 and went into the COVID economic crisis in a very, very financially vulnerable state. So I really, really hope that this time around we can learn the lessons from 2008 and develop the policies and the solutions to promote financial inclusion and access to fair and affordable finances. So without further ado, now let me introduce the experts who are going to shed light on the issues. And first of all, I'll have Kat Farrow, who's from the Cash Action Group. People may remember that Natalie Sini led a groundbreaking review on access to cash in UK. Digitalization has become very, very important, but that has consequences in terms of access to physical cash for households. But access to physical cash remains important for people. So we'll hear from Kat on what that means in terms of access to cash for Northern Ireland consumers. Then we'll hear from Paul Jones, who's from the Social Economy Research Unit at Liverpool John Moores University. I know Paul very well. He is one of the leading experts when it comes to access to fair and affordable credit. And he's an expert in the role of credit unions in providing access to credit, which, as we know, credit unions in Northern Ireland are very, very important. Then we'll have Alastair Ross, who's from the Association of British Insurers. Alastair is the Assistant Director of public policy at the ABI for Scotland, Wales and Northern Ireland. And as I say, I'm really, really pleased to see insurance represented in this discussion. It doesn't get enough coverage. And I'm really pleased that the industry is represented here as well, because we've got to hear the voice of the industry if we want to tackle financial exclusion. And then we'll round off, as I say, by hearing from Emma Mullin from Advice NI. Now, Advice NI is a marvellous organisation. It's a charity that represents nearly 70 advice organisations, member organisations that provide advice on subjects, really important subjects like housing, debt, benefits, and of course, employment. And as I said in my introduction, we can't have access to fair and affordable finance without the right advice and support, and that's the job that Advice NI does. So that's the thing. That's the introductions done. So now let me just move on now to the first of our subjects, which is around access to cash. So, Kat, I'm going to turn to you first, really, on to actually describe, say a few words on the access to cash review, and particularly, I wonder, could you tell us what do you think are the key issues for Northern Ireland consumers regarding access to cash and banking?
Yeah, of course, Mick. Thank you. So the Access to Cash group was set up in May 2020, and really it's the major retail banks who've opted in, coming together with some leading consumer groups, really to try and develop a model for the future, to try and ensure that cash remains viable and accessible in communities across the UK. It's been working really quickly to come up with this new approach. It was announced just before Christmas. And really what we've come up with is a UK-wide approach. So we looked really carefully at the different needs of communities in different parts of the UK, and came to the view that actually there are lots of factors that are universal. So, for example, rural areas need different access to cash considerations from very urban areas. We looked at things like demographics. We looked at the age of populations. We looked at a whole range of different things when we were coming up with this new approach. And we came to the view that actually we should have a single set of standards for the whole of the UK, including Northern Ireland. And that was informed by our experience of the community access to cash pilots. And as you'll be aware, one of the communities that took part in that was Mullin in Northern Ireland. We learned a lot of good lessons from those pilots. And really that formed the evidence base for this new model that is now up and running in the UK.
So, Kat, thanks for that response. But I wonder, could you say a bit more about what actually happened in Mullin? You know, did you learn anything particular about the Northern Irish experience from the pilot study in the Mullin community?
Yeah, we got some really interesting insight from the Mullin pilot, and actually some of my favourite findings that really surprised us actually. So obviously Mullin is it's a community that I think almost doubles in size during the summer months because it's such a popular tourist destination. And what we really wanted to understand in Mullin particularly was what is the impact of that on the cash infrastructure, and how can we provide some sort of resilience to enable the community to cope with that extra demand. And what we found was the role of cashback actually was key in Mullin. It really did come into its own in those busy summer months where the population increased dramatically. But interestingly, it also proved to be a really popular solution to cash access for a wider range of people than that. And what we found that I found really interesting was that for certain older people and more vulnerable people, they actually, as they grew in confidence in seeing cash back as a cash access solution, they actually started to prefer it in some cases because they liked the familiarity of being able to go into a cafe or go into a charity shop. It was in Mullin, and they've already got a relationship with the people who run those establishments, and they were able to very discreetly get their cash back, pop it in their purse, just as part of their normal day-to-day lives. And what they told us, interestingly, was that they liked that informality. And I think going into the pilots, I certainly had an assumption that people like the formal banking environment, and actually that sort of shattered that illusion for me because we got really good feedback on the role of cashback. And it also, I think the other thing it highlighted to us in the Mullin context was the role of the post office as a really key institution, certainly in more rural areas. and in smaller communities as well, and just how important that is. And there was one bit of feedback we had that I remember from Milan, which was the post office is my routine. I pay my bills there. I get to do my withdrawals there. That's what I do. I'm not interested in cashback. That's what I do. And so I think the experience really highlighted that there is no single solution that works in every community. And actually, by deploying a range of different cash access solutions in the right way and in the right community, providing the right service, you really can make people's lives a lot easier, and particularly people on low incomes. So one of the key findings of all of the pilots right across the UK was the potential to improve the lives of people who are on low incomes and who need that cash access locally. And that was one of the key insights from the whole pilot programme.
That's really, really encouraging, Kat. I mean, obviously, low income groups are very, very important to the Consumer Council. But I just wonder, as an aside, what was the reaction of the sort of the local businesses and the small businesses in the community? Did they find it was a benefit for them as well? As you mentioned, the community doubles in size during the summertime, so having proper cash facilities for local businesses must have been important as well.
Yeah, I mean, less so in Millal, interestingly. We had less prominent feedback from small businesses in Millal. But as a general rule, of course, we found that we know that, or we suspect that one of the biggest drivers of cash disappearing is retailers no longer accepting cash. So actually making their lives easier in terms of deposits, particularly, less so withdrawals, but being able to deposit money effectively and quickly locally had a huge impact on small businesses. And so that, again, was one of the really key findings. And it's something that the Cash Action Group is focusing on quite heavily now to make sure that cash remains viable by making sure it remains a viable option for small businesses.
Great. Thanks, Kat. And could just one more question, really. I mean, what do you think now needs to be done in Northern Ireland to protect physical access to cash and banking for those that need it? What are your recommendations from the group?
I think probably keeping up to speed with what's happening in this space. There's a lot of good work happening, particularly through the Cash Action Group. I mean, we do have a process now that's up and running, and Northern Ireland is clearly going to be part of that. And what that means, very, very quickly, just to help people's understanding, is that when a core cash service like an ATM or a bank branch is due for closure, what happens is that community gets looked at independently by Link, obviously the not-for-profit behind the ATM network, and Link makes a decision about whether that community is going to be all right, or whether actually something needs to be deployed to make sure cash access remains in that community. And of course, if a new service is required, that gets funded by the banks, the firms that are taking part in the Cash Action Group collectively. So it's a real kind of shared initiative, shared services. And Northern Ireland is part of that. So clearly, communities in Northern Ireland will be assessed if and when services are scheduled to be closed. And I'd be very surprised if new services were not deployed in Northern Ireland to keep cash accessible to communities.
Oh, it's nice to end on an encouraging note. Thanks, Kat. Now, Paul, can I now turn to you to discuss the really, really thorny issue of access to fair and affordable credit? This seems to be a hard nut to crack over the years. And let me start by asking, I mean, obviously you'll be aware of the role of credit unions in Northern Ireland, but I mean, can you say, what do you think, does the credit union movement have a key role to provide access to fair and affordable credit? I mean, it plays a big role as it stands, but can it play an even bigger role?
Of course it can, Mick. Yes, of course it can play a bigger role. But I think, first of all, we do need to recognise the role it currently plays. I mean, credit unions in Northern Ireland are embedded in communities everywhere. And the last time I looked, there was somewhere between 100 and 150 credit unions in towns and communities across Northern Ireland. It's really about 6 or 7 years ago, then we at the university conducted quite an in-depth look at credit unions in Ireland for housing rights in Belfast, looking at how credit unions could expand their reach into low-income communities, into low-income families. But of course, one of the things that we found straight away was actually most credit unions are already serving low-income families in Northern Ireland. And the way you can see that is the level of savings deposits in credit unions and the level of loan borrowing. You know, if people are borrowing less than £500 or small amounts, you know that you're in a low income area. So credit unions in Northern Ireland are already serving low income folk and low income communities. Of course, they are a little bit more diverse than some of our credit unions in England, and they serve more moderate income families too, with higher value loans, which is absolutely fundamental to their survival and their sustainable development. But when it comes to serving people on lower incomes, there is a lot more they can do. And one of the things, despite the fact that there are thousands of low-income families in credit unions in Northern Ireland, and when you look at the beginning of how they started in Northern Ireland, they were started precisely to reach out to the unserved, no doubt about it. It was not to have an alternative service for the served. You know, in places like Derry and Belfast, they were focusing on the poor really at the beginning, and still do. But, and one of the big issues, and now I don't know how, I think this is changing a lot in Northern Ireland, but one of the things was about Northern Irish credit unions, in as great as they reach into the community, there are barriers for access. That was one of the things. And I think it's changing a lot in recent years, but there was a great practice that they had in Northern Ireland, which was great for sustainability, but not great for reach. Was you used to have to be nominated and seconded by somebody to join. You had to be a person of good character to actually get in the credit union in the first place. And I remember being on a street in Belfast where somebody told me, who was on a low income, oh, credit union's not for the likes of us, you know, because we don't match that. Now that's changed, and has changed a lot. Can they reach out further into communities? Because we do know, as much that people are being served by the traditional model, and the traditional model in a credit union is save and borrow, save and borrow. The two is like one product. You save and borrow at the same time. We know that a lot more could be done with credit unions if they begin to kind of, or to be honest, Mick, they've already started to do this in many places. But the more they start to relook at their business model, and how and in what way can they reach out greater into low income communities? The first is about actually, you know, being more accessible, sending out the message that actually the credit union is for you. One of the things that we looked at in the past was maybe credit unions could partner more with different organizations like, you know, the Housing Executive and other, you know, charitable organizations to actually reach out more into communities and send out the message that yes, the credit union is for you. And also then to think about the products and services that do have for this particular demographic. Because one of the things we know, Mick, from lots of research in the past about how people on very low incomes now use credit, they use it in a different way to more moderate income folk. They need credit now. They need it to be flexible. They need to speak to people who understand them and who are sympathetic. All those sorts of things, which sometimes doesn't quite fit the traditional kind of offer of a credit union. You've got to be pretty well organized to have a credit union product, you know, because you save and borrow all of the time. So actually, the modification and the development of products and services for the low-income market is critical. And I know credit unions are actually doing this. One of the products that we have in Britain, which I know there's a research project at the moment in Northern Ireland looking at, is linking credit union borrowing to repayment through child benefit. Mm. Now, that's being done at the moment. Now, that works wonders in the rest of the UK, because it gives people that kind of security of repayment, accessibility when they need it here and now, which is what you need. And we've got hundreds of thousands and thousands of people on these benefit-linked loans. Well, that's a kind of product development that credit unions in Ireland could I know I'm going on a little bit. Do you want me to stop?
No, that's fine. No, I've got a few more questions to ask you.
The other thing, so that's one thing. You've got to kind of think about what products and services work in very low income families. Yeah. And the traditional model might need to be modified.
Yeah, that's really interesting, Paul. I mean, I'm a huge fan of credit unions. You know, I mean, I might be based in London, but you can tell where I come from. You know, and the credit union movement was a huge part of our lives growing up. You know, so I'm a huge fan. But I'm interested in what you're saying about how do they develop partnerships with other organisations to expand the reach. You know, and you mentioned housing associations. I mean, is there how do we develop partnerships with housing associations? How do we develop partnerships with big employers, for example? We know from research in England that you know what they call workplace payroll saving schemes are a tremendously efficient way of actually helping people save and borrow. Is there more we can do to form those kind of partnerships in Northern Ireland to
there's a lot reach? There's a lot more that can be done, Mick, because unless things have changed in the last 48 months or so, which I doubt it, through the pandemic, not a lot of that was going on. Payroll deduction, for example, is not very high in Northern Ireland, and linking with other stakeholders. I mean, housing associations, there's not as many in Northern Ireland as there are in the rest of the UK, but there are other kinds of organisations.
There isn't the housing executive, which is
housing executive here. Yes, that's right. So a lot can be done in that area. If I've got time, there's just a couple of other points I want to throw in the mix.
Sure.
One is, and I know this is a hard one for many Northern Ireland credit unions. If credit union people are listening to me now in Northern Ireland, I know the kind of horror that will suddenly appear on their faces, which is you have to price for risk. You see, one of the barriers, that barrier about whether credit unions are for me or not, that I've already mentioned, is one barrier. The other barrier is credit unions being risk averse. So you say about moving, more deeply into the financially excluded demographic, and it's scary, to be honest. It's scary. And one of the things that we've learned in the rest of the UK, and I can't see them, but I can just see all the credit union CEOs now looking to see. I know what he's going to say, is that we have moved more to price for risk. In other words, we charge a little bit more on very low value loans. And in a sense, it's very hard to do if you don't do that, because, administration costs are high. If you're employing staff, costs are high, and, loan losses need to be controlled, but they may be high. You have to price for risk. And in Northern Ireland, we don't price for risk. We adopt the traditional model, which is 1% per month for everybody at all and every time, ad infinitum, till kingdom come. That, I suggest, with respect, needs re-looking at. And I know there are credit unions re-looking at that as well at the moment. Yeah. And if I can throw one other thing in,
sure,
is in terms of the modernization of the credit union business model, it's technology. More and more, we've seen through the pandemic. I'm on the board of directors of a credit union just outside of Liverpool, and we've seen maybe 10,000 people go online and go digital through the pandemic. You need to have good digital, services. Even for, you might say, well, isn't that for more moderate income folk? Not really. Most folk can know how to use digital. It helps them to kind of control and then kind of manage their money well. They can see and they can apply for a loan on their phone. People can do that, and they can do it in my credit union now, and they can apply for a loan for £500 on the phone, and they can get it. And so the technology is a really big issue.
Yeah.
So I mean, I could go on.
It's a really interesting point. I mean, I can, as you say, I can already feel the emails coming in about the risk-based pricing and the sort of the ethos of the credit union movement. Yeah. And I'm sure the credit unions would say they're very much aware of the need for technology, and a lot of them are actually doing it. As I say, I'm a huge fan of Northern Irish credit unions. I think when you look at the market share they have, they would actually make the English credit unions blush. They're streets ahead of the English credit unions when it comes to actually access to the market. But as you rightly say, Paul, with the right support and the right legislative framework, maybe Northern Ireland credit unions could do even more to provide access to fair and affordable credit. It's a good news story, credit unions in Northern Ireland. But if we had the right enabling framework, then maybe we could do more.
I think that's what we've got to recognise is the amount that credit unions are already doing in Northern Ireland. And you quite rightly say they're outstripping a lot of our English credit unions. But, they could do more. They know they can do more. And many credit unions are endeavouring to do more through better, more strategic approach to marketing in lower income communities, maybe building partnership relationships with other organisations, reconsidering the way that the products and services that they have. This child benefit loan is on the agenda at the moment in Northern Ireland, and other ways in which you can have flexible access to credit. One of the big points, of course, that this was an international learning. I first learned it in South America, was that you have to split the link between saving and loans. Sometimes people, just need a loan. They don't need to save for 3 months before they get that loan. They need it now. And sometimes we just have to respond and develop products and services that will respond to people's needs.
Well, that's very, very helpful, Paul. Very interesting. It's actually a really, really exciting area, and I hope we're going to look forward to collaborating and working with credit unions to help them develop their services in Northern Ireland. But as I say, they're doing a great job. I mean, just look at the Bank of England stats. The Northern Irish credit unions are streets ahead of the English credit unions. And a big shout out to Scottish credit unions as well, because they're ahead of the English and Wales credit unions as well. Anyway, but I'm sure there'll be more to come on that. There's more interesting debates to be had about the role of credit unions, and we look forward to that. Now, let me now turn to, as I said in the introduction there, what I think is almost like the Cinderella of financial exclusion, and that is access to insurance. Now, the reason why I think it's really important that we include insurance in this debate is actually quite simple, because it is one of the goals of building financial resilience. If you look at the action plans for money and pension service strategy and so on, getting people to build up savings is really, really important, because if people have emergency savings, they don't need to borrow from loan sharks or high cost lenders if they face an unexpected bill. But try even for households on low to medium incomes in these very, very difficult times with the cost of living crisis, it can actually be difficult even to save relatively small amounts to protect yourself or to provide a financial cushion. But I have seen some statistics which suggest that actually, if we had access to, differently priced insurance products, affordable insurance products, then low to medium income households could actually insure themselves against that risk, that economic shock, in a much more cost-effective way than having to build up savings in anticipation of an emergency happening. So I really, really think that we don't really discuss and cover the role of insurance enough when it comes to building financial inclusion and financial resilience. So I'm really, really pleased, as I say, that Alastair has come along to represent the Association of British Insurers in this debate. And Alastair, could I start really by asking you, what do you think? Could you summarise what can the impact be on people on low incomes if they don't have adequate insurance?
Yeah, no, thank you very much, Mick, and thanks firstly for inviting me along to take part today, and also your introduction there, because I couldn't agree with you more in the sense of insurance being a kind of Cinderella or a kind of secondary or even a kind of tertiary priority when it comes to looking at access to financial services and tackling financial exclusion. I mean, if I think back, I first started working in this area about kind of 20 years ago, and it was all about banking and access to banking services. It was how you manage your cash, and insurance always sat 2 or 3 steps behind that, or 2 or 3 conversations down the line. And I don't think that's really changed in the intervening couple of decades. Others may have different points of view on that. So I'm grateful to you for involving us in this discussion, because it's important. I mean, if you go right the way back to first principles, what's the purpose of insurance and what's it about? Well, it's about providing financial cover for if the worst happens. So if you're unfortunate enough to have an accident with your car and it needs written off and you can't drive it again, have you got enough savings in your account? And then you've just made that very important point. Have you got enough saved up to replace it? Not even like for like, but just be able to replace it with another car to keep you going. Maybe to keep you going to your job, maybe to keep you going so you can support the family in terms of what they're doing. If you are unfortunate enough to have your house be affected by a fire or a flood or something like that, and you suffer a lot of damage, maybe the property is completely destroyed again, are you going to be able to have the money to replace the things that you've lost or replace the things that you've damaged? On average, almost all households won't be able to do that. They won't have enough in savings to just, replace a whole, house full of contents in one go. So that's why you insure. You pay either a few pounds a week, or a bit more a month, or you pay an annual premium, and in doing so, you shift that risk of having to pay out a large sum if the absolute worst thing happens. So you pay that premium, and your insurer, in return, if the worst does happen, and you make a claim, they'll pay out on it. They'll provide you with a replacement car, or pay for repairs to your car. They'll provide you with the money, or they'll get the repairs carried out on your property if your property is damaged, or replace items if you've lost them in a fire or a flood or things like that. So that's what we're talking about here. And the reason I'm kind of labouring that point is because insurance, like a lot of financial services, is full of jargon, and it can be perceived as being quite difficult to get your head round and to penetrate. I think we've also got an issue in the market where people will tend to buy on price. And listen, I'll hold my hand up and admit I've done this myself. But when it's come round for the car insurance renewal, and I've had a wee look in the advertising break in Coronation Street and just gone online quickly and had a look at a price comparison website. And the issue that I would have with that, and I've learned through experience myself, is if you buy on price, you're maybe not necessarily buying all the level of cover that you need. So you take a very basic example. If you're buying motor insurance and you buy a third-party fire and theft cover, which is the legal minimum that you need to have, if something happens to your vehicle that doesn't fall under one of those terms, you're maybe not going to be able to claim on that. So it's really important for us as an industry to help people understand that and to get over that. And actually, just as we're talking to you, the ABI has recently announced a partnership with an organisation called Plain Numbers, which is focused on improving people's financial literacy and giving them just that little bit more confidence to understand insurance and other products, so they know what they can get with them, what is right for them, and they're making more informed choices. So that's a good thing. There's definitely a responsibility in the industry to step up. We can perhaps go into a bit more detail in a little while of the points you made about access to affordable products, because we've been involved in some work, particularly on the home insurance side of things on that, which has got some quite interesting findings. But there's responsibility on the industry to deliver products that people can understand, they can access pretty easily, and they are as affordable as they can be. But we're also reliant on people understanding our products. And with that comes a responsibility for us to help them to do that. So as I say, we've got the partnership with Plain Numbers. It'd be good also to come back to the point that Paul had made earlier about the scope for partnerships. Because I think, to be absolutely upfront, insurance is not really something you get excited about buying. If we're being honest, it's a bit of a grudge purchase. And also it's something that you don't especially understand the ins and outs of. And there's maybe a trust issue around, well, what am I getting for this? And if the worst happens, am I going to get paid out? The claims rates in terms of payments are up in the kind of high 80s and 90s in terms of percentages. But anecdotally, you'll always come across somebody who tried to make a claim and they weren't successful, they didn't get what they wanted, and all this kind of stuff. So there's a lot that we need to do as an industry, but we also need to work with other organisations such as the credit unions, and it'd be good to expand that a little bit later on, but also the likes of housing associations and the housing executive and others, to try and understand, because people may not be prepared to go to the insurer directly, but they may have a little bit more faith or a little bit more confidence to deal with that if they're doing it through an organisation that they deal with more regularly, such as their housing provider.
Yeah, no, I mean, it's absolutely, Alastair. I mean, let me push back slightly on on access to affordable insurance in Northern Ireland. I mean, totally take your point. We need to, make insurance jargon free. If we can improve financial literacy, that will help consumers understand, the benefits and limitations of insurance. It'll maybe raise awareness of the need to have insurance against risk. But even if we have financially literate consumers, if the insurance industry doesn't want to provide insurance, or they can't afford to buy insurance, then improving financial literacy only goes so far. Now, there's always been a thing in Northern Ireland where, for various reasons, the typical Northern Irish consumer pays more for insurance, than their GB counterparts, and I appreciate there are reasons for that. I mean, we've done a lot of research into this, but I wonder, could you say a wee bit more about what do you think are the key challenges in providing access to affordable insurance for low-income consumers, and what can we do about it? Is there, very, very interesting what you mentioned, partnerships again, but I wonder, could you say a bit more about some of the innovation that might be going on in the insurance industry to provide basic products to low-income groups? Because maybe sometimes that's the most important thing, that we ensure the essential needs rather than some of the nice-to-haves that other people might want to insure.
No, I'm absolutely happy to do that, Mick. And I think maybe an important starting point is to distinguish between two things, because sometimes I find that the two terms are used interchangeably when they're not. But you can talk about access to insurance, and actually there's a really competitive market across the insurance market in the UK. There's the best part of 100 different motor insurance providers. You've got lots of choice in the market. Some are fairly niche players will specialize in particular types of vehicles. Some are much bigger players. You've got some really well-known brand names. So there's lots of access, and there's lots of opportunity access. But you're right. It's whether it's affordable and how affordable it is, for what you're looking for in terms of what you want to cover. Insurers, like everybody else, are really, really conscious that affordability is probably the biggest single issue for people that aren't taking out insurance. So there are some insurances that are required by law, like your car insurance if you're a driver. But, for the discretionary ones, for the ones that you don't necessarily need to have, such as contents insurance for your property, the research that we've looked at recently certainly is affordability, where the biggest single issue is just that. So if you're not taking out insurance, it's because of the perceived cost, and also because you've actually got other things that take a greater priority, whether that's paying your rent, filling your cupboards with food, meeting your energy bills, and everyone's well aware of the cost of living pressures that we have on us at the moment as a society, and that's going to be particularly felt amongst the lower income groups. There are other parts of it in terms of affordability. I'd be remiss if I didn't point out that part of what you pay in insurance premiums is tax to the government. And that's something that's doubled since 2015. It's now at 12% that the government's taking in tax off of almost every insurance policy that is sold, and that's a factor as well. So that's still keeping the prices higher than they'd necessarily be. But affordability is an issue. There's also availability, and availability is relatively good, but there are harder to reach groups within society, and there's some of the ones that you've been talking about already. And for insurers, it's different to a bank or different to a credit union in that insurance doesn't have a branch-based model. So it's not as if you've got an insurance business on the corner, or in the high street, and you would be able to go in and discuss that with, an advisor and go through like in detail. Also, you tend not to touch on insurance as much as you do your bank. You'll maybe, depending on your personal preferences and your requirements, you might look at your bank statement on a pretty regular basis. You might have an app on your phone and you might be checking that all the time. If everything goes okay, you're only going to have to deal with your insurer once a year when you're looking on whether or not you should renew your policy, or whether it's time to move to a different provider. And so it's a bit more difficult for insurers then to have that contact with their customers. It's not impossible, but it's a bit more difficult to do that and build up that relationship so that they can kind of share information and advice.
Yeah.
And as I was saying earlier, you've seen the importance of partnerships where insurers can offer their products in association with a landlord, be it a housing association, the housing executive, or whoever. And that endorsement aspect, I think, is really important, because if you've got somebody who's dealing with the executive or their housing provider on a regular basis, and they see an insurance company has teamed up with them and are offering contents insurance, for example, it gives them a bit more reassurance and perhaps a bit more confidence to deal with them.
Yeah, that's very, very interesting, Alastair. Again, like the discussion we just had about credit unions, it does seem that the role of what we might call trusted intermediaries, and
that's a good term. Yeah,
partner,
it's a really good description.
Organizations are very, very important in this whole debate, because quite often, if you look at the numbers behind the price of insurance, for example, quite a lot of that cost is actually involved in reaching households that are hard to reach, and then there's also the trust issue that you mentioned.
Yeah.
So establishing relationships with trusted intermediaries and other partners, I do think can be a way of actually, reducing the cost of what they call the cost of distribution, which should actually contribute towards making insurance more affordable.
Yeah.
But yeah, no, that's really, really interesting, and thanks again for that. I think I was always impressed by the approach the industry and the government actually and the regulators collaborated on. I think you'll know about the thing called flood re. Because of the increase in flooding in GB, it made it difficult for certain areas, people who live in certain areas, to get insurance. And the industry, the government, and the regulators came together to collaborate on a solution to that. Let's hope we can think as creatively when it comes to sort of the other aspects of insurance involving stakeholder collaboration like that.
I mean, if I can come back in very, very briefly, I'm glad you reminded me of that, because I meant to raise that earlier, but you've got a great example in Northern Ireland where, because of the regulatory approach and the approach of the local authorities and the Northern Ireland Executive in relation to planning consent, Northern Ireland's done a much better job than other parts of the UK in terms of protecting communities against flooding by not permitting development on floodplains. So as a result, you've got a much lower risk profile for properties at risk of flooding. And as you say, you've had innovations like the flood re scheme, which is basically an insurance scheme for insurers, so they can pass the risk of that flood element onto this reinsurance scheme. And what that does is that reduces and brings the level of premium down for households that previously maybe struggled, gives it a much higher risk. It's been a massive innovation. It's benefited, I think, just shy of 500,000 properties right across the UK now, including properties in Northern Ireland, because while there are some areas, while most areas are benefiting from a much lower risk of flooding, there are some particular communities that are just at higher risk, and they've benefited from that. The flip side of that is that took a long time to put together. That was about 5 years from start to finish, and required laws to be passed in the House of Commons and the House of Lords. So there's definitely a role for that. But, it'd be good to be creative and have a look at some things that can maybe come into effect a little bit more quickly. Yeah,
absolutely. As I say, I think it's the fact that it's been done before. I think, there's a well-trodden path there now. We've got a model. We've got a model to build on. So it'd be really interesting, to watch the space for some of the innovation around using that particular model, in other areas of insurance. Ultimately, insurance is about protecting people against risk. It's about sharing risk, So I think we do need some kind of innovative thinking when it comes to spreading access to affordable insurance for the kind of people who are not served very well by the market at the moment, But yeah, Alastair, thank you very, very much for that. Now, last but certainly not least, we come on to access to money and debt advice, and I mean that, and that's not just a cliche, because as I was saying in the introduction, we cannot support people into making the right financial decisions, whether it's in access to cash, access to insurance, access to affordable credit, building financial resilience through their savings, and so on, without the right access to good advice and good support. Because ultimately, I think what's really interesting and helpful about the advice NI is the range of areas that the member organisations provide advice on. I'm always very, very keen to point out that, a lot of people like me, policy wonks and academics like Paul talk about the barriers to inclusion and what causes financial exclusion. And the single biggest barrier to inclusion and the single biggest cause of exclusion is poverty. That's the single biggest cause of financial exclusion in this country. So if we're going to provide good advice to people, it isn't just about helping them sort of provide access to new products. It's about helping them maximize their income, helping them with advice and benefits and affordable housing and so on. So it is great to see that we have organisations represented by Advice NI, which provide advice, holistic advice on the range of issues that affect Northern Ireland households. Now, Emma, I wonder, could we start off by asking you, what do you think, what are the key issues that you're seeing in terms of consumers needing support in Northern Ireland?
Yes, Mick, thank you. So I suppose, over the past 2 years, it's been a very difficult time for clients. And, as you said, Mick, clients who, present to us who need money and debt advice, the sole reason, the main reason for them experiencing problem debt is always low income. And many, the majority of our clients wouldn't have any savings, and quite often, they don't have insurances in place. So I suppose really what we've seen over the past 2 years, COVID made it that much more difficult for people to try and actually deal with their debts. We did have a significant period of time where people could not access insolvency options. The debt relief orders weren't accessible to people for some time, and of course, court proceedings were suspended, so people were unable to, put themselves through bankruptcy as well. And, as well as that, the ongoing difficulties with, people's reduction in income and the rising cost of living meant that it was very difficult for people to, deal with debt and make any sort of debt repayments and enter into debt repayment plans when they've got little to no disposable income. And I suppose on the other side of personal debt, we also have our business debt service. So we have seen a lot of sole traders who, again, very, very difficult for them to deal with the financial instability over the past couple of years. And they found it very difficult to try and, be able to predict or how sort of their business is going to be impacted. And they've also, been faced with how to access solutions, and that has been limited for them. And I suppose now we're at the stage, Mick, where, after a lengthy period of forbearance, we are starting to see now that lenders are starting to ramp up recovery processes. So I suppose we are starting to see creditors begin to contact people now much more frequently and send more pressing letters to, get people to engage with them and to make repayments on their debts. And I suppose it's lenders have had a couple of years where they haven't had their usual processes in place. So, everything has changed on both sides of things, and it's a bit of a kind of a learning curve now at the minute, and it's a slower process to try and engage on behalf of clients with those lenders as well. And I suppose over the next couple of months, we will now see court proceedings recommence. So we've noticed, there are going to be a significant increase in the Land and Property Services starting to recommence their recovery processes and proceedings. There's 2 years of rates arrears that have accumulated and that were not being recovered. So that's a big issue now that clients will have to deal with. And I suppose, again, that's because the court proceedings were suspended. There was a suspension on court action for, rent arrears as well and mortgage arrears. So again, we expect that to be sort of a big issue now in the next few months for clients as the lenders start to initiate that action.
It's a really, really, really interesting point. I mean, I don't know if there was a really good piece of research done recently by one of the big charities United Kingdom Charities, which showed that, interestingly, a lot of people actually did quite well out of COVID because, people weren't spending as much. They were staying at home. They weren't going out to the pub or going to a restaurant or whatever. So we actually saw the savings ratio, the UK household savings ratio reached 27% at one stage. It was the highest level in recorded history, economic history. However, what was more concerning was that for every one household that did well out of COVID in terms of their finances, two households saw their financial position deteriorated. And as you rightly say, I must say, I think some of the creditors do deserve a bit of credit. Some of the forbearance that was exercised was really, really helpful. I think the regulators played a pretty good role actually during the height of the crisis. But as you say, that's all easing off now. That's all coming off. And I'm concerned that as the spotlight moves away from COVID, that a lot of people who are ended up with arrears that have not been dealt with, there will not be as much of the spotlight on lenders and creditors to actually sort of influence them into treating customers fairly. So I don't know if you're concerned about how do we keep the pressure on creditors to ensure that they treat people fairly now that the spotlight is moving off the immediate effects of the COVID crisis.
Yeah, and I think that is a really important point, Mick, because one of the things that we've noticed is a significant increase in the number of clients who are presenting with mental ill health.
Yeah.
So extremely vulnerable clients, and I think it is very important that we continue to ensure that lenders do comply, with the FCA regulations, and they continue to follow, processes and practices to deal with clients, as outlined in the Consumer Credit Sourcebook. So for us, that is something that we are very, very aware of, and it's something that we would continue to raise if we do see any unfair practices and policies in place by lenders, that we raise that as a policy issue.
Yeah, absolutely. And I wonder, could I ask you a slightly broader question, Emma? Clearly, as I mentioned there, post-2008 crisis, I have to say, I don't think we made much progress at all in the UK in helping people build financial resilience as the economy recovered. And as a result, we went into COVID with a lot of people in a financially vulnerable position. Now, it strikes me that the immediate priority is protecting the people who've been hit bad by COVID. But I think it's also important that we try and support people into building financial resilience against the next economic crisis, because there will be another economic crisis. We've had two within a sort of a relatively short period of time. There will be another crisis at some stage. So I wonder, do you have any thoughts on what advice agencies and consumer organizations and others can do to help people once they've dealt with the emergency financial problems? What can we do to help build financial resilience, against the next economic shock?
I suppose that's a sort of sometimes a difficult one for us, Mick, because just the nature of our service, we unfortunately are getting clients who present to us when they are in, that sort of very last resort. They're at crisis point, and it very much is about trying to deal with that debt. But in terms of building financial resilience, like we do offer, and we try to encourage clients to avail of financial inclusion and financial capability advice that we would provide. So very much around those key topics, on the importance of insurance that we've already touched on, advice and tips on savings and how to maximize income where possible, and how to reduce expenditures. And all that together are measures that can be put in place for clients to try and have a bit of a safety net. Granted, all that's very difficult for clients who have very, very low incomes, to try and put all those measures in place. But I think the other thing that we touched on was the holistic approach. So I think it's very, very important as well, to ensure that the debt industry does adopt a holistic approach and ensures that clients or individuals are provided with as many sort of support services as possible, so that they can sort of get that urgent or specialist support that they need. And I suppose the other thing as well is just, some measures that we would welcome would be the legislative review that's due to happen on debt relief orders now in the latter part of this year, which would see the debt amount increased to 30,000 in line with the rest of England and Wales. So again, it just allows that other group of clients here in Northern Ireland to avail of that debt relief order as a solution to deal with their debt as well.
Yeah, great. Thanks, Emma. Can I just ask you one last question? Really, I found it really interesting how one of the effects of the COVID pandemic is that it's changed the way organisations in the third sector deliver services. Has the pandemic changed the way your member organisations are delivering advice to your clients, or do you still think that we can't? I must say I'm slightly concerned about this headlong rush towards sort of doing everything via technology and the internet. Do you still see a big role for proper face-to-face advice?
Yeah, Mike, again, that's another big change for us in terms of service delivery and our, the model and our delivery channels. So, at the beginning of the pandemic, face-to-face advice, was suspended and it couldn't be offered. And it's only very recently in the past few months that there's been a gradual approach to providing face-to-face advice again on a limited capacity. But what we've noticed over the past 2 years is that there is a really urgent, and necessary need for face-to-face advice. It's so important to offer that channel. We've noticed that there are a huge amount of people out there who are digitally excluded. So, they cannot, it could be a range of issues, their vulnerabilities, communication issues, just their own preference. They find it very difficult to access telephony advice or, advice over Zoom or email. And again, a lot of debt cases are very complex and there's an awful lot of legislation, and it's very important that people understand the processes that they're entering into and what it means for them and the impact. So a lot of that work takes time, and it's very, it's such a necessary thing to explain that to people face to face. And it's also important for people to understand and have confidence in their debt advisors and be able to sort of build that rapport and a relationship with their debt advisor as they go through that journey in order to deal with their debt. Yeah. I think the other thing we noticed was that there's a lot of people in the absence of face-to-face advice who have put off dealing with their debt because they felt that they maybe couldn't access other delivery channels.
Well, that's really worrying, isn't it? Because I know maybe this is not the most important thing, but I've often wondered that it must be, when you provide people with good money advice or debt advice, there's an awful lot of paperwork involved. Sometimes, people do bring along bundles of papers because that's the only way they can make sense of the problems that they're facing. And it's just as difficult to provide access to good quality debt advice and, and gain the trust of an advisor and go through the paperwork if you're doing it all online, so the access to face-to-face channel, I think, must be important. But again, it's one of those areas where, I'm sure we can do more with technology. We can make it more inclusive and we can make technology itself more accessible. But as you say, there must be a role for a very large role, continuing role for face-to-face debt advice for people who need it and want it. Okay, folks, so that's the 4 specialist areas covered. Now I want to ask you all 2 questions, right? And the first question I want to ask you is, speaking as a former board member of the Financial Conduct Authority, I'm an ex-regulator, so I want you to be honest here. Tell me, what do you think more? What could the financial regulators do more to promote financial inclusion? Now, let me start. I'll go around the same order again. Kat, what do you think? What can the regulators do to promote access to cash better?
Well, Mick, we're working really closely with the FCA at the moment with the prospective legislation in the UK on access to cash. We're all expecting some legislation before too long, and I think really what we would welcome is an element of flexibility around innovation. So there are going to be new services that become available that enable people to have better access to cash, and I think having an eye to that in the regulation that allows us to experiment with new types of service would be really welcome. Things like deposits. What are some really good new solutions to that potentially for small businesses? So I think collaboration and flexibility is really important to us as we move forward in this space. And I'm pleased to say that we do have that relationship, and we are enjoying that at the moment. So. Yeah,
that is encouraging. I'm a great believer in small steps having a big impact, and I'm very interested in some of these new services now where if you go to the supermarket with your debit card and your shopping comes to 17 quid or whatever, there's the option to top up your savings with the other 3 quid or whatever, So I think some of the small scale innovations can have a really big impact here on financial resilience, So let's hope we can have greater collaboration between the regulators and the industry and consumer groups as well, and advice organisations to promote those genuinely socially useful innovations. Yeah. And Paul, what do you think? What would your big ask of the financial regulators be to promote access to fair and affordable credit?
Yeah, I guess, Mick, my response would be rather about legislators and regulators together, the two legislators and regulators together. I think in Britain and in Northern Ireland, and indeed in the south of Ireland too, we're at a stage in our credit union development where we have to rethink our purpose. What are we here for? We know what we were here for 20, 30, 40 years ago, but where are we going now? And one of the things that we do know, and there's a lot of conversation about it, and of course it's all been kind of on hold because of the pandemic, we do need a complete new relook at credit union legislation and regulation going forward, what we can do. There are lots of things we can't do. There are lots of things we can't do in the insurance space, for example, which we could do, but we can't do. There are all sorts of, we come up against blocks all of the time. Credit unions should be able to deliver the financial services in its entirety that people need, even pet insurance if they want it for the dog. So there's too many blocks. So we do need a relook at legislation going forward to take credit unions into the next generation. Also, we need from the regulator, we need an approach which is appropriate to our sector. We have issues around capital adequacy ratios and so on, which can block development in I won't go into the details of all those, but we do need a responsive regulator that, throughout the British Isles, in both parts of Ireland and in Britain, that actually, enables the development of the credit union sector rather than keeps it back, because sometimes it does keep it back. Okay,
great stuff. Thank you, Paul. And Alastair, what would you like to see from the financial regulator apart from deregulation? You're not allowed to say deregulation.
No, I won't say deregulation. You can rest assured on that. I'm going to push my luck a little bit, partly because Paul's just borrowed one of the points that I was going to make, but also it's maybe not just restricted to the regulator. So listen, I would echo what Paul has said around reviewing the restrictions on the types of products credit unions are able to offer. And that doesn't necessarily mean credit unions becoming insurers, but if they're able to offer insurance products, it's kind of not permitted by the FCA. It would be good to look again at that. The FCA could also have a look at some of the wider infrastructure of its regulation, because certainly in other parts of the UK, we're aware that housing associations no longer sell contents insurance alongside their rent. And that's back to the point I made earlier about when you're going in to pay your rent, if you're able to pay, in some cases, maybe £1 or £2 a week to get some insurance cover to cover the contents of your property. They're not able to do that because a housing association opts no longer to do that because of the regulatory burden. So that I would give you that point, the regulator. But it's not just regulators, and particularly in Northern Ireland, we've got a real issue with the legislators in terms of the way that the civil justice system operates. And we've got a situation that if you're unfortunate enough to be involved in a minor road traffic accident, so if you sustain an injury for whiplash or some kind of other bodily injury, and you decide to go through a solicitor to litigate to get compensation for that, the reality is that the solicitor who's acting on your behalf is going to make more money out of that than you will in compensation. And that's due to the way that the civil justice system runs in Northern Ireland. And it means additional costs to be paid by the insurer, defending that claim on your behalf if you have to raise the claim. And that adds cost to the insurance product, which insurers are going to then have to incorporate when they're doing their underwriting and their pricing. So, as I say, it's a little bit cheeky, but bearing in mind Paul borrowed my idea, I hope you'll tolerate that.
Well, that's very interesting. I can't possibly comment on that one, Alastair. That's a whole new can of worms. That one is, trust me, in Northern Ireland, but it's a well-made point, but I can't say I agree or disagree with it, And Emma, what would you say to the regulators? I know you mentioned some of the regulations around debt relief orders and so on, but anything else you think is really important that the regulators and the legislators, the government could be looking at to help support financial inclusion?
Again, I think, I suppose just on the regulation side of things, it's maybe just a consistency of lenders' practices. I mean, some of the lenders are fantastic, but then there are other lenders where it's a lot more difficult for people to engage with them, or if they have a debt advice service engaging on their behalf with them, it can be very difficult. And I think it's very much so around the vulnerable people and how they engage with vulnerable people, and if there's a real need for the debt to be written off, some lenders have little to no toleration for it, and they're very clear that they will not do that. So it's maybe a bit of work to do around the consistency of how lenders interact with vulnerable customers. And I think again the other thing is around access to affordable credit. So we've seen a huge increase in people accessing illegal lending and very high interest lending. So again, it's just other sort of access to things like the no interest loan scheme or any other sort of pilots or schemes that could be made available to people in Northern Ireland. Great. Very, very, very good. Thanks, Emma. So just we're almost there, folks. Just one last question now, and here's you get a chance to, leaving aside regulation or whatever, tell me one thing, what on your wish list, one thing you would change to promote financial inclusion in Northern Ireland, or generally speaking in the UK. Kat, back to you.
I don't know if it's anything I would change, Mick, but I suppose my wish for where we are at the moment with the cash access group is that we are at the beginning of something here which is, a whole new world of shared infrastructure and retail banks. Mm-hmm. And my wish would really be that what we manage to develop genuinely meets people's needs in communities. We've never really done this before. So we've got 2 banking hubs in the UK at the moment. We're about to roll out some more that we announced in December. And it's fascinating, and it's a new area that we're pursuing. And what we really want to do is learn about what works. That was the whole point of the community access to cash pilots. We want to roll things out that actually meet people's needs and people like using, and that work for industry as well. So really, if I had one wish, it would be to get to the end of this year, and we've managed to do that and to deliver on the expectations that we've built. That would be my wish.
Okay, great. Thanks, Kat. Paul, one thing. You've covered almost everything, but anything you've forgotten to say?
Well, one thing that's a little bit different, Mick, I would add, and it's a bit like Kat, it's not something that I could personally change, but it's something I would personally desire a great deal. Because when I look, and I'm very familiar with the credit union movement over the whole of the island of Ireland, both north and south, and I know what it's achieved in the past and what it possibly could achieve in the future. My wish would be for a new generation or of credit union leaders. It's leadership that we need. It's leadership that we need in Northern Ireland to look at, how credit unions can change and develop, maybe even rationalise. Maybe you don't need 150 credit unions throughout the whole of Northern Ireland. Taking it to the next generation, arguing with the regulators and the legislators to adapt the legislation and regulation to be fit for purpose. Because what I would like to see, we've spoken a lot today about credit unions reaching out to the lowest, to people on very low incomes. And that's right. And credit unions are always there for the financially vulnerable. But they can't operate unless they can operate for a much wider demographic. They have to be the financial institution of choice for large numbers of people in Northern Ireland, both on low incomes and more moderate incomes. And I think it's leadership to take credit unions forward to become a real cooperative, socially motivated alternative to the banking sector. That's what I would like to see. I'd like to see it a lot bigger and a lot more part of society for everybody. Yeah.
Okay,
Don't actually need. There are many parts of the world, Mick. You don't need a bank.
I was going to say, I think it's this current generation of credit union leaders have done a great job. When you look at the figures, they are the institution of choice for a lot of people in Northern Ireland. When you look at the market shares, they are a genuine competitor to more mainstream sort of commercial financial institutions. No, I take your point, but I've got to get a word in for the current generation of credit unions.
All right, okay, yeah. So me too.
They've made a big impact here. They've made a big impact. Sorry, Alastair.
Thanks, Mick. I'm going to stretch your patience a wee bit again. So you said earlier on that insurance is a Cinderella service within financial services. Now, it's a wee while since I've watched Cinderella with my daughters, but I think there was maybe about 3 wishes or so that the fairy godmother gave. But I'm not going to ask for 3 things.
You're getting one. Yeah.
Listen, the one will be enough. What I would like is for people to have greater confidence about dealing with insurance, with financial services, and with numbers. So I mentioned the Plain Numbers partnership that the Association of British Insurers and our member companies have got involved with. And just to give you some of the numbers on that, why are we doing that? It's because research shows 40% of people, so that's 2 in 5, 40% don't feel confident using numbers in their everyday lives. That's a problem. We've got to do something about that. 37% say that easier access to numeracy tools online would help. So that's one area we could work. 30% would like more number practice, and 25% say that clearer explanations, which is something the industry can do, would increase their confidence in dealing with numbers. So if we can get that right, working with people, the industry coming together with Plain Numbers and other organisations to just improve people's confidence. Now, it's partly in resilience, it's partly numeracy, but just having the confidence to actually do a bit more with their financial services, and in some case ask more of their insurers or the credit unions or the bankers or whoever else, but just get better at it. That's what I'd want.
Okay, great. Very, very positive note. Yeah. Emma, so you have the last word.
Yeah, so I think I'll jump on the back of just what Alastair said there a bit about confidence. So yeah, very much about encouraging and raising awareness for people to have the confidence to deal with their debt. And there is, to a certain extent, there's still a lot of stigma involved. I think especially maybe a lot here in Northern Ireland, where people maybe, it's very hard for them to have that first conversation to get the ball rolling to deal with their debt. So again, just what I would love to see is just a bigger sort of awareness and encouragement for people to come forward and know what services are available to support them and for them to be able to access them to deal with their debt.
That's the end of our roundtable. I just wanted to say thank you once again to our expert panel. I think it's really, really important to recognise that financial services can be daunting, but I think what our panel has done is actually shed some light on the issues that matter to Northern Irish consumers. Now, as the cost of living crisis bites and we've yet to see the worst is yet to come, I just want to sort of reassure our viewers that the Consumer Council will be doing its best to support consumers through these difficult times. And we're very much looking forward to working with all key stakeholders to try and improve access and support vulnerable consumers in Northern Ireland. So let me just finish off by saying, as well as thank you to our expert panel, Can I just also thank you to our viewers who've taken time to listen to what is a very, very important issue. Thanks again, folks. Thank you. Bye.